right.
This is all new to me. So, hi, everybody, whoever's watching. I'm sure nobody is watching it, but that's okay. I'm very proud of myself for hooking up this live, by the way.
Yes.
And I see that there are 0 people. So, nobody's here yet, but that's okay. We're going to hang out and chit chat for a while, and hopefully, people will join in. And as I mentioned in the video I did yesterday, if people can't, we are going to post the video footage later so people can see it at their own. Can you see everything that I see too? Can you see like the count of people and the time and
Nothing?
You just see
No.
the screen.
It's
Okay, good.
it's probably a good thing, Carrie.
I know.
I'm gonna be like, there's 75 people watching.
No, I know. Yeah.
I'll be like, yeah, oh my
Okay.
God, 100 people. This is amazing.
Yeah, I
You
kind
know
of
why?
rather not know. So
And the funny thing is, when we actually really start chatting about the topic, this will all be in there too. So we can't just sit here and be like,
yeah,
we have
exactly
to
right.
like be
Yeah.
personable and exciting because we want people to see us chit chatting and join. All right, so I'm going to start. I'm going to have to probably say this like 10 more times. Today we are unlocking the new rules of real estate, giving people what they need to know about some recent changes that came down in 2024 to the real estate industry. I'm Carrie Califano. I'm a real estate agent with William Ravis. And with me today, I have Kate Rocket, who is a VP mortgage banker with our organization, with our company. And I have Lynn Bell-Morton, our strategic growth manager, who runs our Brookline and Milton, right? Is it just those two? Or they give you another
Yep,
office?
you got it. Yep,
Okay.
that's all I need.
All right. Okay. He runs 2 very busy, productive offices out at Brookline, Chestnut Hill, and Milton. And so we do have viewers now. Hello, everybody who's joining us. I'm going to just recap what we just did. Today, we're talking about the new rules of real estate that came down the pike in 2024. Lots of kind of media coverage around commission and structure and buyer and seller representation. And we wanted to make sure that people understood what those changes actually were from the experts. We're the experts. So I'm Carrie. I'm with William Ravis Real Estate. I'm a real estate agent here for 12 years now. With me today, I have Kate Rocket, who's our VP mortgage banker. Kate's going to share a little information about how these changes do or don't affect the mortgage industry and any tips she may have for buyers as they're thinking about buying in 2025. And then we also have Lynn Bell-Morton. Lynn is our strategic growth manager here in the Brookline Chestnut Hill office, and he is also the manager of the Milton office. So he oversees 2 very busy William Ravis offices. So thank you guys so much, both of you, for being here with me today. It's so great to have you and chit chat. It is super important to me in my business that I really keep my clients informed and educated about what's happening in the market, what's happening in the industry. I think there's so much noise sometimes in the media about what's going on. And so I feel like it's really important that we kind of cut through all that noise and really try to give some good facts and information about what's happening. So with that said, I am going to have Lynn, as our manager, our fearless leader here in Brookline. Can you just tell our viewers this is a very long, complicated court case that came down. There was a verdict, but can you just summarize for viewers? Hi, if you're just joining us, can you just summarize for viewers what happened and why we're talking about this right now?
Yeah, absolutely. Carrie, thanks for having me as well. I mean, like everyone knows, this has been a daunting topic for quite a bit of time. And without getting into the specific details of the lawsuit, we'll kind of fast forward into kind of what it's resulted in. And the result was really to bring about more transparency to the consumer in regards to commissions, right? Just as far as how commissions are paid, et cetera. And the underlining point was that commissions are negotiable, right? So that's something that is that our agents do a really good job. I mean, as you're kind of conveying your value to your clients as well, but also informing the consumers that commissions are negotiable as well. So there was a lot of anxiety. Carrie, you said it just right. I mean, there was a lot of noise that kind of contributed to anxiety within, the different brokerages, et cetera, clients, consumers as well. But I think, Carrie, you'd probably agree with this that as time has gone on post August 17th, I don't want to say it's business as usual, but we're kind of in a flow of this new routine where we have these buyer agreements. There's some anxiety around having these agreements signed, right? And once the agents became more comfortable explaining their value to their consumers and the clients, and also just navigating the whys of having a buyer's agreement signed, I think we all kind of relaxed a little bit and are kind of getting into a flow of having these buyer agreements, which are extremely important to protect both the buyer and the agents and the brokerage as well. So that's currently in place as well, and I'm happy to report. And Carrie, you go through this, you see this on a weekly basis because you work with a number of buyers, but that process has seemed to settle down quite a bit, which is good, and we're kind of in a flow of doing it. As far as commissions, I mean, we're just kind of seeing it a little all over the place, but it's almost like things haven't changed all that much, right? But our conversations and preparations, and prior to going into a broker open, before sitting down with a client, just going through your buyer presentation as you would a listing presentation, that's allowed us to have a different type of conversation with buyers out there as well. And Carrie, I've got to give you a lot of credit because I remember leading up to August 17th, we would have a lot of discussions as an office, and you were one of the handful of agents who, not that you weren't
What
concerned
did I
about it, but
do? Wait,
no,
what
but
did I say?
you did it. You had a really good optimistic view on it as well. I guess you didn't really have much of a choice, right? But but you adapted very quickly and had a really good outlook on it, and I think it shows. And a lot of agents like yourself who are extremely experienced have been in the business for a while and just have that level of confidence about the value you bring defending your commission as a buyer's agent. It puts you in a very strong position as well. And yes, and also for your
Good.
clients.
No, thank you, Lynn. It's funny. Thank you. I try to stay optimistic.
You did.
But it's funny because the reality is commissions have always been negotiable, right? I mean,
That's true.
this has always been how it's worked. But in any industry, there's also standard operating procedures, right? So commissions have always been negotiable, but how it has always worked has become kind of the norm. And so it
Hmm.
became like the rule, the law of the land, right? And so in essence, nothing has changed really. But of course, how we go about getting to those agreements and getting to the working relationships is shifted a little bit. So, and I'm going to
Absolutely.
get into that more a little bit when I do my kind of real estate perspective. But, I think it's really interesting because a lot of people just don't understand it.
Hmm.
And hopefully we'll be able to clarify that for people today. Lynn, I know we only have you for a short time today. I want to see if you can tell me, what specifically, because I've been with this brokerage for a dozen years, and I left and I came back. And so I really love this company. I know agents who have left and come back, and you provide so much support and back end for us under normal circumstances, under regular operating situations. So can you tell us a little bit about like how Ravis as a company prepared for this, and specifically what they've put in place to support not only the agents, but also our clients?
No, absolutely, Carrie, and I'm glad you mentioned that because that's a really key component to the reason why you yourself and other agents, and even myself as a strategic manager, as a sales manager, as an office, we can feel so confident about leaning into the changes that occurred after or post August 17th. And starting from the top, Bill Ravis, Chris and Ryan Ravis have done a phenomenal job with the training that and the resources that have been provided, whether it's with through Tom Ferry or Bill himself. just providing a number of different workshops, role playing, you name it. Not everyone's keen on role playing, but there was a little something for everyone to be able to become more comfortable with their scripts, their talking points. Many agents know their value, they know their worth, they know why it's worth maintaining a certain commission as much as possible, although negotiable. But to be able to, put a contract in front of a client where you haven't in the past and be able to walk through that language, that's where I wouldn't say anxiety, but that was a bit of an obstacle for agents who haven't been accustomed to using an agreement in the past. So just the constant barrage of information and resources. I know we sounded like a broken record at times during sales meetings and different workshops, right? But it was so important. And I think now that we're kind of, I can almost say like on the other side of it, or transitioning post August 17th, I think a lot of that training that, Bill and the Ravises really provided, and through the likes of Tom Ferry and other coaches from his team as well, definitely allowed us to feel more prepared. And I think
Yeah.
that's why we're in the position we're in today. So yeah, I'm glad you mentioned that, Kerry, because that's huge. And we haven't stopped our training. Now it's a different kind of training now that we're, a couple months into it as well. So we continue to prepare and just be nimble enough to adjust to the market and to what our clients need, and more so for our agents as well.
Yeah, I mean, it's so important to realize too, like this is, I think, some of the things that I was saying when we were talking about these changes. Every industry changes, and I think it's natural. It happens. So healthcare, I always say, like, how much were you paying for insurance 10 years ago? What are you paying now? Accounting, all these big industries, the medical profession, right? I mean, the changes has come down the pike. And I think it's been a long time since anything in the real estate industry really shifted. And so I think it was kind of a little bit like, unnerving for some folks. But at the end of the day, I think the key is if your brokerage is ready, capable, and on top of it, and almost even over prepared, right? I'd rather be over prepared than not prepared. And I think Ravis did do a really good job of helping us understand how it's going to impact not only me as an agent, but my clients, my investors, and also my relationship with other agents, because we are now
Right.
we're in this together always, right? And now even more so, that's going to be a lot more possible negotiations around who's paying commission, how it's getting paid. And so I think that is also going to be a shift. And I'm really grateful that William Ravis as a company, and the family that is up there leading us, was able to help us really navigate this. And I know we keep talking about this like very obscure thing, but we are going to get into it. And I just wanted to have Lynn's perspective as our manager, in terms of how it was going. Lynn, before we let you go, I know you have another very important meeting to get to. He's a busy guy. Is there anything else you want to add so that buyers, sellers, investors, agents, people in the world know?
Yeah, the one thing I would mention is, and thanks again, Kerry, for having me. I wouldn't miss this for the world. So this is a lot of fun. We'll have to
It
do it
was
more
hard to
often for
schedule you
sure.
in. So I
Now
appreciate
you're
that.
you're making me feel more important than I am, but but no, but this is phenomenal. And I guess I would part by saying that for those who are listening, whether now or in the future as well, you're working with two of the best there. Kerry Califano is a very solid agent and one of the backbones of our office here at Chestnut Hill. So Kerry, so great to have you. And Kate Rocket is our VP loan officer, works tremendously with our agents, does a lot for your clients as well. So happy to be able to refer to you both as colleagues here in Chestnut Hill. So thank you.
Thank you, Lynn. That was a good
Thank you.
promo piece. I didn't
I know,
expect
right? We paid him
All
to say
right.
it. Mhm.
Awesome. Well, thanks. I'm going
All
to
right.
let you
Take care.
go, and
Appreciate
I'm
it.
going to sit here and chat with Kate. Thank you, Lynn. Take
Sounds
care.
good. Have a
Bye.
good weekend.
See you later. Did I just
You
get
did
rid
it.
of him?
You did.
I did. Yay. Okay.
Yay.
So, Kate, I was going to let you go first, but I think I'm going to shift it and just talk about it a little bit, if that's okay. Do you have a
Yeah.
time limit? Are you okay to hang out with me for a little bit?
I love hanging with you, Carrie.
Okay.
We always have a good time.
Okay. So I'm going to be really brief, but I do want to explain to people kind of what the changes that we're talking about are. This way it's a little bit more clear. And then it makes sense to talk a little bit about like how mortgage is impacted, like how a buyer is, what's going to come down for the mortgage aspect. So basically, as Lynn said, commissions are negotiable. And they've always been negotiable. But again, we weren't really operating in that way. And so when we break it down and we break all the noise, I'm basically going to talk about it like this. I want to talk to buyers out there first. So buyers, this is how it's going to look when you think about buying a house. And it is a little bit different. So there's a number of ways now which commission could be paid. And again, this has kind of always been possible, but it just wasn't how things were done. So the first way that a commission could be paid is like how it's always been done, is through the seller. So the seller hires a real estate agent. They give a commission, 5-6%, and the seller's agent offers half of that commission to the buyer's agent, to whoever brings the buyer to the table. That company and that agent will get 50% of the commission. That is still possible. The other way that this may come down is that the buyer simply pays the agent out of pocket. So there may be times when the seller is no longer offering commission, and it would be up to the buyer to pay their agent their negotiated commission. That's on their contract. And then the other way, which is kind of middle of the road, may be a combination of both. So maybe the buyer has a contract with their buyer's agent. So I'm in contract with the buyer, and we've agreed that I'm making 3% for helping them buy this home. And now we find a home, they love this home, and they're putting an offer in. And I find out from the listing agent that the sellers are offering 2%, 1.5%. To the buyer's agent. So now there's obviously a gap between what the seller is going to pay and what the buyer is supposed to pay their agent. So in that case, the listing agent may provide 1.5% of the commission, and then the buyer would be responsible for making up the difference and paying the other 1.5%. There is another way. For example, these are all like examples, case studies, right? So let's say a seller wasn't really offering commission. They could say to their agent, I'm not going to offer commission because I don't have to, I don't want to, but we'll see what kind of offers we get. And so what happens is, as a buyer's agent, I can talk with my buyers and say, we can put your offer together. We can make it really strong. We can go in over asking. We can ask the sellers for cash back at closing. Within the limits of the mortgage, of course. Mm-hmm. We can ask them to say, look, I'm going to offer you X number of dollars over your listing price, and then I want cash back at closing. And then the buyer can use that cash to pay their agent. So it's not cash out of pocket. Or they could say, I'm going to offer you this amount of money. I just want you to pay my agent 3%. And then the seller can say, okay, I'll pay the agent, or no, I'm not going to pay the agent, or I'll pay the agent 2%, or I'll pay the agent 1%. And so there's going to be just a lot more negotiating. I think it's probably a little bit more like unnerving. That's the second time I've used that word. I think it's a little bit more, unnerving for buyers, because it's like, well, how am I going to know? And the truth is, there are so many strategies that we are now using and implementing when we're working with our buyers to help them navigate this change. So a really good example is somebody who comes to the table who doesn't have the cash, the extra cash. They're saving for a down payment, they're saving for their closing costs, and they say, look, I don't have the money to pay for my agent fee. I want to hire you, you're the best in the business, but I just don't have that extra $15,000, $20,000. Well, in that case, the buyer can direct me, my buyer can direct me to say, I only want to see homes where the seller is offering commission. And so I will say, okay, no problem. So we will look for homes where it is clear that the seller is offering to pay the buyer's agent. And that, of course, affects the seller side of things. And we'll talk about that. But I just want buyers to understand that it's not a situation where you have to have 20% down, which is a mortgage myth. Yeah. You don't have to have 20% down, right, Kate? You could do 10%, 5%, like some loans are
Great.
no money down.
Yeah.
We don't want buyers to be operating under an assumption, a wrong assumption that there's no way for me to buy a house now because I can't pay an agent. Because we are still working with a lot of buyers who are still buying homes, and just depending on the circumstances, we will kind of, make things work to your advantage. So I just wanted to kind of look at the buyer side first. Now, on the sell side, it really is the same thing. It's, I'm going to sit down with my seller and I'm going to say, okay, our commission is going to be 6% if you want to offer a commission to buyers. And if not, you can just pay me 3%, right? And so we'll have that conversation with the seller. I will say we are still encouraging sellers to offer the cooperating commission to the buyer's agent. Because as you saw in my little chat 2 minutes ago about buyers, if a buyer tells me, I don't want to see any homes that aren't offering commission, well, now the seller just wiped out a bunch of potential buyers to their property because they're not offering a commission. And so, you want as many people through, as much traffic through your property as possible. So we are still encouraging sellers to offer cooperating commission. Where they are resistant to do that, we are encouraging them and advising them to still offer some of the commission, or at least be open to offers that come in with commission. And why that is so important is because sales price is one thing, offering commission is another thing. What we really want sellers to look at is the net. You may get a great offer from a buyer and they want you to pay 3% to their buyer's agent, but their offer is still stronger because your net is still more than if you took another offer where you weren't paying out a commission to the buyer side. So again, for sellers, it's not like you're dead in the water that you still have to offer commissions all the time. It's not that buyers are never going to come see your home. But depending on what the seller's needs are, what their goals are, we can work with them to just kind of navigate this new way of being. And ultimately, like Lynn said, this is to be super transparent about where money's coming from and where money's going and who's paying it and who's not paying it. And so that's kind of the important thing for especially buyers to know. Kate, you probably don't know this, but it used to be that you'd meet a buyer at an open house and you go show a property with them the next day because they didn't like that house, and you take them out, you obviously have a relationship, and then 3 months later you get a commission check. Well, it's not like that anymore. So the kind of contractual logistical back end difference is that now when we meet with prospective buyers who want to work with us, we actually have to sit down with them, have a conversation, tell them what our services are, provide our value, and sit down and draw up a contract that says, this is what I'm going to do for you. These are our obligations to each other. And this is how much our services cost, so that they actually have a very similar contract to what the sellers have always had, right? A listing contract. So we have listing contracts and buyer contracts. I have always had buyer contracts with my clients, so that is not something that is a change for me, but I think for a lot of agents it is. So I am going to just stop there because there's a ton of information to unpack there. And, again, I'm open for questions, Q&A, phone calls, texts if people want some more information. But I want Kate to have a voice in this conversation as well. I've worked with Kate before. I've referred clients to her before. She's such an asset to our, not only our company, but our office. She sits in my office in Brookline, and we get to just talk and advise and brainstorm. So having a mortgage person right at my disposal to be able to say, hey, I have this client. What do you think? How can we navigate this for them? So Kate, welcome.
Thank you. Good to be here.
So good to have you. So first, let's just, before we get into this whole shift in the real estate market, talk to me about just what William Raveis Mortgage provides. What kind of services, what kind of products do we offer?
We have lots of products here, from jumbo to VA to FHA. You have your conventional loans. But not just that, we have the ability, if you don't fit inside the box, we do have out-of-the-box loans for people that just, let's say they haven't been in the self-employed for more than the qualifying amount of time. We have asset-based loans. We have also investor and business loans that you can just use the investment rent to qualify and not use any income. We have renovation loans. We have delayed financing as well. If you do pay cash within 6 months, you can be able to do a cash out refinance, which is great because usually you have to wait a year. So it's nice. You have that ability. So you can get the house, get in there, and then you can figure out, hey, I want a little bit of money, So
that's great.
Yeah, it's good. So
okay, finish.
no,
I'm sorry.
yeah, that's good. Yeah.
Yeah, I mean, I think, it's funny because when you have a mortgage company attached to your brokerage, it's people don't like, what? Look, we have mortgage and we also have insurance. And sometimes it's so nice to have everything under one umbrella because we can communicate with each other and really work together to provide a full like concierge package for people. We should do one of these with Nikki.
I know,
our
we should
insurance person.
definitely.
And we might,
but that's
I know I keep saying this, but we might have a cocktail if we do that.
I know we definitely will. Sure, yeah.
But Nikki is also our insurance person. She is such an asset to the company and our office
She's
as
the
well.
best. Mm-hmm.
So Kate, I know Lynn touched a little bit on how the brokerage kind of planned for some of these changes. Can you tell us a little bit, were there any changes that happened at the mortgage side of this?
Well, I have to say that our operations department stayed on top of this, and we have a direct line to Fannie and Freddie, who kind of are the masters of the whole, mortgage world. To begin, they are the ones that have all the regulations and set the guidelines. And we have a direct contact with them. So we stayed in contact with them throughout the whole time and trained our whole office on it. And, it's funny because the irony is that buyers have always been financing it. And if you really look at it, the irony of all of this is
funny,
like,
right? It's in the sales price.
Yeah.
It's in the sales price and you're financing the sales price, right? So you've always been paying for it, just not potentially out of pocket.
And it'll be interesting to see what happens when when all of a sudden we have lots of inventory and things are staying on the market.
Right.
It'll be interesting.
Yeah.
So, it's a lot to see in the future, right? For right now, we have you said it earlier, that we have the unique ability to have insurance, mortgage, and the real estate in one office, which is great. People do look like, oh God, Ravis Mortgage, like, what is that? Well, I worked for direct lenders before. We're the exact same thing. We sell to the outside servicers that we have correspondent relationships with. And that's just, we are a direct lender, just like any of my competition. The uniqueness is that you can haunt me and stalk me if I'm not getting back to your client. And you know where to find me, but that's the other thing with this is, if you are in negotiations, we have the ability to speak with each other to get to the other side, because every property is going to be different. To your point, like one seller is going to be offering commission, one's not. You might be in competition with somebody that's like, oh, I'll take just 1%. Again, at the end of the day, the seller should only be concerned about what their net is. Yep. And, the cleanest way to do it is to have it say, I'm going to give the 2%, 2.5%, whatever it shall be, and it'll be customary closing cost. But, say that it's not, you can always do, and it's 1.5%, and that 0.5%, and your buyer does not have it. You could also do that as a seller credit.
Right.
So, and you can build it in, but honestly, it's going to be the same purchase price. So you might as well, it's going to come to, I feel like it's been business as usual. We haven't seen much.
Yeah. I was going to ask that if it's.
I was going to say we had one example, we've only had one since August. And the reason I brought that up is it was a 1.5%. And the buyer was bringing that 0.5% in this instance because they didn't offer the seller credit. So it was just a sticking point, and everyone wanted to get to the other side. So they did bring that 0.5%. But other than that, it's been really business as usual.
Yeah.
Who knows down the line, if it does become something, who knows if the mortgage industry will change and say you can finance it in. Who knows?
Right. Just finance in your buyer agency fee, right? That's what you're talking about.
Exactly.
Be able to say you're paying $500,000 for your house, not Boston. You're paying, you're paying $800,000 for your house,
Yeah.
and you're also then paying, X amount of dollars to your agency, and you can just put that into a loan.
Yes.
That's what you're saying may come down the pike. I mean, it'll be interesting to see how it all evolves, right?
Right. I mean, who knows? You have the hard part with the loan to value, so it's just it's just gonna. It's really right now, luckily, it's been business as usual. So we can be happier about that. So let's hope and cross our fingers with that, But, like you said earlier, down payments are not 20%. So, first time home buyers basically mostly has 3%, maybe not anything, for a VA loan. So there is that. So.
Okay, we've been talking about this for like literally a year. And it's funny because you just brought up something that like just dawned on me too. For those buyers who do have the assets to put down 20%, but again, even those people who have been saving and saving and saving, they may not have extra for, even though they have 20%, they're like, oh, wow, they may not have extra for their agency fee. And I just got to thinking like, a 20% down, you could say, well, I'm going to put 15% down and pay my agent, or put 10% down.
100%. So that's the thing.
Right?
Yeah. And that's why it's great to have a relationship.
That's only for, no, it's okay. That's only for those people who do have it. But I think there are just different ways that we can really look at this. And it really is just going to depend on each situation is just going to be different versus before it just felt really cookie cutter. It's like, this is how it worked. This is how it worked. This is how it worked. And nobody knew like how much I was getting paid or how much they were getting paid or how, and again, it's this whole thing came down to provide more transparency to the buyers. And I tell you from my perspective, Kate, the interesting thing about it, when agents found out this was happening, a lot of agents really panicked because they were like, how do I tell my buyers that I'm, and I think this is probably what Lynn was talking about before.
Yes, I remember
meetings, like stop, because, if you're good at what you do and you know what you're doing and you're the top of your business and you're the top of your game and you're the top in your office, then you should have no problem explaining your value and saying, this is what I am worth. And it's okay if you don't want me, you can find another agent. And that is really hard, right? For some people. And then there are, of course, the younger agents just coming into the business that may not have the experience or the confidence because they're younger. And then you have the older agents in the business who were like, I've been doing it this way for 25 years. Why do I have to change?
Why do I have to change? Yeah.
Yeah. And so I don't know. I feel like I kind of got caught in the middle somewhere where I'm like, I have enough experience to know that like, look, I want to brag. I'm really good at what I do. I love my clients. I love the work. I really like helping people achieve their real estate goal. And so for me, it's like, this is what I'm worth. And again, I'm not everyone's cup of tea either. And that's okay. There's a lot of really good agents in our city.
Well, that's not it. That's, your client base, and that's who you're going to drive with. You're not always going to drive with everybody. Right. So that has something to do with that commission, right? It's just, you should defend it. Just, attorneys have their fees. Accountants have their fees.
This is what I've been saying. Yes. I said in staff meeting once, I said, look, we are the only profession. Think about, we are licensed with our state and all around the country. We're licensed. We're responsible for fiscal transactions. And we're the only profession that works for free until you buy a house. Yeah. We could argue that some attorneys do too. They work on a retainer and they don't get paid until your case closes. And if your case doesn't win, you don't have to pay them. Mm-hmm. Okay. But we sometimes will work with clients and all of a sudden we get to, 2, 3, 4 months in. And I've had this happen to me where a buyer says, you know what, we had a family crisis, somebody lost a job or somebody was getting divorced and it happens. And then they just put their buying on hold. And I'm like, oh my God, I've been working with these people for 3 months without a paycheck. Yeah. And so, we all need to provide for our families, right? And that happens in this business.
Well, it happens to me. They shop around yeah.
Absolutely, right. They're shopping around for a mortgage. So I think from my perspective, from the agency perspective, if there's any agents out there who are watching, and I actually did get some registrations from agents who wanted to be part of this conversation and listen to it, is because how do I navigate this? How do I sell my services in this new in this new way. And I feel like we need to value our profession before we can expect others to value our profession. And, look, all respect to used car salesmen, people sell used cars and they buy used cars. So I don't even know how they got a bad rep. I mean, probably from like 1945, there was some,
Right.
schmarmy vacuum, somebody who was selling vacuums door to door. I feel like there's a lot of misconception about, or maybe some, maybe not a lot, but some misconception about kind of what a real estate agent is, what we do, how we work. And I really value my profession, and I don't want my colleagues, my other, agents in the business to devalue our profession. And, we see that sometimes with discount brokerages where they're offering, I'll sell your house for 1%, and I always say, right, you get what you pay for. So
With that, and it's not sustainable. Yeah. I mean,
Right, exactly. And so, William Ravis as a full service agency, we'll navigate this as we always have with, utmost professionalism and care for our clients, I think is the biggest thing. So Kate, I would love for you to stick around if you want to hear me yap on a little bit. I just have a few more things I want to say.
Okay.
But I want to give you an opportunity. Is there anything else that you would want viewers to know about mortgages or buying? Any tips or strategies besides the old, have good credit, get some money in the bank? What's important?
It's really to set a budget, because you might be able to afford a $2 million home, but you really want to sit down and crunch those numbers and see what you're comfortable paying per month, because that's what it really comes down to. And it's not just the principal and interest payment. And I think that's where there's a whole misconception too, because you have your taxes for each town, property taxes change, condo fees if you're going to get a condo, then you have your homeowner's insurance. That's your total housing payment.
And utilities now are no joke.
No joke. I know, the gas, what I heard, yeah. Mm-hmm.
That's a
I'm happy I have oil for once this year.
It's a big thing for, even if you're buying at the $2 million level, well, you have to heat a house that's big as well. I mean, everybody has a budget in some way.
But you also want to have money left over for entertainment too. You don't want to change your lifestyle either, right? So it's, you don't want to be house poor.
What is the percentage nowadays that people say you should spend on your housing costs? It used to be 20%, 30%, 35%. What's the
I mean, there's no real number. You can go up to like 50% DTI or even higher, depending on the loan, sort of loan you're in. The rule of thumb is to be under 50 for a conventional loan. That's with qualifications, whatnot. But the 25% is really a nice number, 28%, anything under 30, where you can still see that people still have a lot more income, disposable income to use.
Yeah. Okay.
So.
That's great.
Mm-hmm.
Awesome. Well, Kate Rockett, thank you so much are you going to hang out? Or you want me to sign you off?
I think I'm going to sign off. As much as I want to hang with you.
No, that's totally fine. Totally fine. I'm going to wrap it up and answer a few questions that I got come in and open up the floor for some questions. But thank you again, Kate, so much.
Thank you.
And I'll see you at the office.
You bet. All right.
Okay,
Thank you.
Take care.
Have a good day.
Have a good weekend.
You too.
Bye-bye.
Bye.
Okay, folks, now it's just me. And let me see if I can change this, because I don't know. I'm just new to this streaming thing, so I don't know if I'm changing or not, but there we go. My head feels very big. Anyway, sorry about that. So thank you so much for joining us so far. We kind of went over some of the changes in the real estate industry, mostly around how buyers and sellers contract with their agents to work together, where the commissions come from, and how that kind of has changed a little bit, but really hasn't changed in some ways. And so I want to open up. If anybody has any questions, you could put them in the chat, or you could even DM me. Facebook or Instagram would be totally fine. I did have a few questions come in that I just want to address. So the first question we got is, is this a good time for me to sell, considering the changes in the commission? And then there was a follow-up question that was also given the recent election. So let me talk about commission structure first. So look, I have been in this business 12 years, and my advice to sellers is always sell when the time is right for you. There are people who need to move for work, for jobs, for a growing family, for a smaller family downsizing. And so I think the ultimate thing you should be thinking about is like, is this the right time for me? Is this the right time for my family? And I don't think the commission changes have affected anything. We are starting to see in the market, in the Boston area anyway, some longer days on market. The number of days on market is increasing, and it's kind of a little bit of a shift where everything was like flying off the shelves really quickly. We are starting to see some like moderation in pricing, but everybody's still buying and everybody's still selling, and sellers still are sitting on a ton of equity. So again, I think to answer the question, is it a good time to sell? I think it's the right time to sit down with an agent and have that discussion. Like, if I sell, what's my price? What's my listing price going to be? And then run the numbers. What is your net going to be? Is that net sufficient for you? Are you going to be happy to walk away with X amount of dollars? And then you can make your decisions from there. But this change, this shift in the industry is not affecting whether or not people are buying homes. So that's the short answer. Yes, it's a perfectly fine time to sell. So the recent election, we did, I think, nationwide see a little bit of hesitancy in the market leading up to the election. I do believe that there is still maybe some hesitancy post-election, because regardless of politics, it's always hard to see how things are going to shake out when there's a transition of power, right? So like even in a company, when there's a new CEO, you're not sure how things are going to look in a few months. Is the new CEO going to make changes? Are the changes going to be good? Are they going to be tough? Are they going to be challenging? So I think there is a little bit of election-related questioning, but I don't think it's enough to really affect things at its core. We live, especially here in Boston, we live in such a vibrant, strong real estate market that we're not, and people flock here for tech jobs, for education jobs. So I don't think we're experiencing a ton of that hesitancy. Do we see it maybe a little bit? Yeah, I think so. But again, because sellers are sitting on so much equity, it just may take a little bit longer to sell the house. I don't think it's not going to sell. We don't think it's not going to sell. And you're seeing that from days on market, right? So a house previously in the height of our market a few years ago was selling in 3 days. We're seeing properties on the market for a week, 2 weeks, 3 weeks. So I think that's where you're seeing the hesitancy of people kind of coming and looking and just not sure if they're going to pull the trigger yet. So those are the answers to whether it's a good time to sell. I think one of the important questions, this was a great question that I got, and this is an important question, is has this changed anything in terms of how I hire a real estate agent? I know for myself, a lot of buyers that I've worked with, I've met in a few ways. One, referral from other clients of mine or people I've worked with, people I know my whole life who, kind of refer me to their friends and family. That's one way. The other way is open houses. So let's say I have a listing in Rosendale JP, and a buyer walks in, doesn't really love the house, but we get to chatting, and they say, we don't have an agent. And I say, let's have coffee, and we talk, and they hire me to be their agent. There's a number of different ways that people kind of meet up with an agent, right? And I don't think that's really changed. I do think now buyers will have more of an opportunity to sit down at the table and have conversations with your agent, because now there's going to be a contract involved. And before it was like an unwritten contract, but because we have to have it in writing now, there will be an opportunity for you to interview more formally your agents. And I think that's great. And I think it's important. And I'm up for the task. If anybody is looking, I'm happy to interview. I think it's important. I think it's something that you should do, because it's a huge investment, and you want to be working with somebody that you feel you can really not only trust, but connect with. Sometimes it's just about like, I really like that person, or I really dig their style, or I think they're, really knowledgeable. And in order to help buyers and sellers, my team has created a document basically enumerating the questions that buyers and sellers should ask their agents. So if anybody wants a copy of those, I'm happy to send those out. might even put them on my social pages at some point. But, we think it's important for you to know what kind of questions should you be asking me if you're going to hire me? What are important things to know before you enter into contract? So that is a great question. It just depends on what you as the buyer or seller or investor are looking for in an agent. But I think it is super important to interview and find the right agent that's going to fit you and your needs. Let's see. We have one more question that came in earlier to my Instagram DM, and I'm just going to pull it up. Let's see. Okay. There it is. Okay. So the question is, and again, another really good question. When did this go into effect, and is this a permanent change? So the court case that this came from was happening all of last year and before then. And in this past August, these changes technically went into effect. And they are going to be part of the fabric of the real estate industry now. Brokerages, to be fully transparent, some brokerages are still kind of navigating, even the ones as well prepared as mine, because when something changes, you can't always anticipate how it's going to play out, right? So we have circumstances and responses and understanding of how most things will play out, but there could be something that comes down the pipe that's like, wow, nobody thought of this. So we have to navigate that. So these changes are part of the industry now, and it's nationwide. It's not just in the city. And agencies and brokerages all over the country have worked to help their clients navigate the new changes. So great question. Okay, I think I'm done here. I want to thank you all for watching. Hopefully this was helpful. Please, if you need any more information or want to drop a comment or a question after we're done here, don't hesitate to reach out. I'm happy to answer questions. Also, if you got a lot of information out of this and want to see more live videos or even pre-recorded videos, let me know. If there's a topic that you're interested in or a topic that you really feel like you need to know, we absolutely love to provide information to the public. So you can DM me that request. And this long form video will also be available on, I think it'll go up on our YouTube channel and whatever other social platforms will host it at the length. But also, if you're watching this in the recorded state, so you're watching this later down the road, and I'm not here live to answer your questions, please don't hesitate to reach out, contact me, DM, and we are happy to help. So thank you all for watching. Have a great weekend, and we'll talk to you soon.